hidden sleeping giant. It's right here beside me just now, PayPal. And we'll be talking about LivePerson, we'll be talking about crypto. And we'll be getting stuck right into all the chat, all your comments I've got up on my screen up there. So it's good to see people taking part already. Thanks very much to the participants, Disco Biscuits, 1,000 Years of Darkness. And why would we be wanting to talk about this sleeping giant over here? If we hit our goal, I'll dig deep, deep, deep into the notes and everything that I've made, and we'll get a proper answer to that question. In brief, just to kind of set up the show, I like a lot of what they're doing, and I think that you could make comparisons with them and Apple. So that's a big statement, and we'll have to pick that apart a wee bit. Is it really true? What do you think, audience? Is there any comparison to be made between PayPal and Apple? Yes, they both have P in their names, okay, so big win to all the people who said that in the chat. But there's also, a discussion to be had about moat. Apple has its ecosystem, the products that we know and love. Maybe it's not fair to say that. So we will try and pick apart the story and think about it from both angles, I guess, in today's show. But I think there are other comparisons to be made because of activities that they do, which could be compared to what Apple have done in the past. And I think that what to do is to take a look and see kind of how the story maybe went for Apple on the charts during a bit of that period of time, and see if there's anything to learn for PayPal, perhaps. How about that? And we'll also be taking a look at the other things I talked about already, and I think it's probably best to jump over early doors and see what's happening in the crypto land, because right now crypto seems to be moving quite a bit. So I'm just going to bring up the crypto chart. Folks, this is a live show, but if you're watching it later on the recordings, then wow, what a legend you are. Give yourself a pat on the back, because everybody's welcome here. Join the community, take part in what we do, and it's great to see everybody that's in the live chat with us. Just going to bring up the Bitcoin chart. So this is the price right now as of time of recording. And it's 117,000. That's good. It's been as high as 118,000 just a little bit ago there. And if we put that into context, what does it look like compared to the areas we'd already identified on the chart? I think it's time now we have to drag this one over and see how it's fared. Oh, just testing that area. And this story actually is pretty simple. So long as we're moving up through these zones, then it's very, 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 very bullish for crypto. We've got a big test ahead of us. Regular watchers of the show will know that I have these things I call volatility bands, or diagonal lines that are on your screen there beside me. These diagonal lines, it's a big, big, big target to overcome. If that happens though, a few things are happening at once, and this purple box gives us a good marker to know that we've really beaten the prior high when that happens and breaking into a former area of resistance. I want to say that 120,000 means an awful lot for Bitcoin right now, but the big number that we're looking to, of course, is up past that 124,000 high that has been set in there. Is there enough legs and steam in Bitcoin to make it past what was previously resistance once and then twice, and acted as support on the way down here, flipping support from resistance? And that's really the question right now. On the 4-hour time frame that I have up beside me, you can see that, of course, the bullishness has been quite strong on that RSI. Magnitude of these moves is taking it right up into the overbought territory, which you'd expect to see, I guess, given that former support and resistance. Big challenges to get past, up to past that 120 price point, like I said, of course. But things are looking pretty good so far. Consolidation, anything that keeps us up in and around about this chin above the water territory is very, very good. Going up to the daily time frame, you can see that the movement so far on this chart has come to a bit of a crossroads and a technical perspective, because on this 24-hour time frame, if you just take a look here at the RSI, putting it full screen, you can see that the prices are pushed up to the extent that the RSI is challenging the previous lower high on the RSI, as part of what could conceivably be called a downward trend. So we've managed to arrive here at this point, putting in what is almost a higher high and almost higher on the RSI, but not quite either. So what do we make of that? Quick question to the audience, because it's so close to having a feature on the charts, but it doesn't quite have it. To have this particular feature, it need to be a slightly lower high, and the RSI would need to be higher than that previous high. What that would be hidden bearish divergence. It'd be a very negative signal right now. You'd be looking for the market to capitulate. The question that comes in here always as like, is this movement up an opportunity to exit and take liquidity at highs? Is there a rotation from other assets into Bitcoin? And is this simply a movement from the higher risk tail, longer tail altcoin market moving into a safer coin, just internal rotation? Or is this new money that's coming into the market and lifting prices up higher? And in a scenario where you don't have that technical warning on the screen, it starts to feel a lot more optimistic and positive. And that's why I wanted to draw attention to that. These things could change, okay? This could change in the next couple of hours as we move towards midnight in the UTC, Universal Time Midnight. Maybe we get a different 24 hours tomorrow that changes that aspect slightly and leaves us with hidden bearish divergence. This sort of thing could happen. It could, however, it's looking pretty good right now for us moving past the center line and moving up. Yes, if there is a bit of consolidation just here, has it done enough to really give us hidden bearish divergence? Not quite enough. So that 4-hour time frame with it being overbought could have a bit of a correction at these points, but if we consolidate in this zone and push up, very, very good. Okay, so that's good to get Bitcoin covered. That's what's happening right now. Is there momentum? Yes, there is. Is that possible to fail at this moment? Sure it is. You'd have to be considering the resistance if you traded it up to this point and you were looking to exit, and that puts you into that first category of people that I mentioned who are looking to exit here. If you're looking to short it, well, you don't have like a really kind of juicy short signal, although you could of course maybe make a low risk trade here given that we're at resistance. But then if you're hodling this and kind of looking for a longer term aspect move, then this could be one of those things that gets us towards a breakout. So I'm kind of excited and keeping my eyes peeled on what's happening in the crypto market. So there's a few things I want to discuss about crypto right now, but let's just see how chat's getting on first for a minute. Give us a second to breathe after that analysis. I'll put the chart onto the daily time frame using the D there, and you can see that prices are above the 50 simple period moving average, 200 simple moving up towards the top side still. You know, it's a period of downward price action since the highs at 124k, but this could break that. And if it doesn't, are we still on the basis of just forming a base? Is that what the regime is right now? And we're going to try and tackle that question by looking at a couple of other coins in just a second. We're 8 out of 10 on the way to the goal. I think we might make it. We might make it to the goal, folks. How long have we got left? 8 minutes. We might make it to the goal. See what the comments have been so far on that front. We've got, come on, only 3 more to go from 1,000 Years of Darkness, cheering it on. Another great Wednesday. Hey, Rocky from Natural Friend. Hey. Hi, Lisa as well. Good to see you in the chat. Minner. Yo, buddy. Thanks for the beer and the coffee from 1,000 Years of Darkness. Cool. 9 out of 10. We're almost there. That's pretty great. And we'll check with the live chat messages. What are you saying right now? Howdy, Merrick. Nacho. Crypto scary at the moment. Russell took a hit over the past few days, says Gareth Moore. Yeah, one of the aspects of crypto that I was talking about recently.
Hello, Gareth.
Hello, Gareth, says Trade Spot in here. Yeah, so one of the things I was talking about recently in the crypto forums was to do with how there are different aspects to ways that you can look at crypto, like how you can look at stocks. You've got SPX with big index, S&P 500. And you can also look at things like the Russell, for a different band of the coins. One of the interesting things in crypto right now, which is happening, can be seen if you are a little bit jazzy with your input here into the symbol search box. If you put an equals sign and then write total 3 minus others, you'll be given a chart which is looking at a particular slice in the market for crypto minus another particular slice in the market, leaving you with just a select set of cryptos. Now, unlike stocks and shares, what you have here is an index that's been made by TradingView as part of the way of easily looking at a selection of coins, and you have a number of them total, which includes all of the top 150 coins on the list. You've got total 2, which excludes it, but it still has Ethereum in there. So, that's the next biggest crypto, and it's important to have an index which looks at all the other coins and see how they're doing compared to Bitcoin, without Bitcoin in there. And then you've got total 3, which excludes Ethereum and Bitcoin. Again, very good, because Ethereum is such a big one that it's good to look at the vast body of, the runners up, if you like. Now there's another one, and I just mentioned total 3 there, so that's all the cryptos in the top 150 list, excluding Ethereum and Bitcoin. Why, by the way, you might be interested in that chart, just as a slight kind of explainer here, is because, of course, that a lot of the strength is being concentrated in some of these top performers. And you might notice the same thing in the SPX, for instance, S&P 500, where NVIDIA and Apple can move a little bit and it moves the SPX a lot. Whereas if the smaller companies in the S&P 500 move a lot, it might not even affect the SPX index price at all. And that's because of the weighting towards particular things. So excluding them would be handy. And there's not an easy enough way of doing that compared to this. Now, others, right, that is a selection of other coins from that top 150, or maybe a bit more, 150 coins, I think it is, with a few of the also rans in there as well. And if you were to take a total 3 and then subtract the others from it, what you're left with is kind of the best of the total 3 slice as an index on its own. So you're looking at things like XRP, Ripple, Cardano, Solana, just in a small basket on their own. And they're just the top slice of the coins from the other list. So this is an interesting chart. Oh, that didn't work. Why not? Let's try that again. Total 3 minus others. Do I have to click on that to make it work properly? Look at that. It works when I do it. Now I look like an idiot. Total 3. Why is it not working? Well, anyway. Something to try on your own, folks, right? Something to try on your own. There's an interesting chat. If somebody wants to paste it into the thing, I'm doing a live show right now, so I'm not going to figure out what I'm doing wrong. But if somebody wants to paste it in the chat box, I'll paste that symbol in there correctly, or whatever it is. But like what I wanted to kind of talk about there really is that there's a select group of them, and they're performing very well. Okay, they're kind of the best performing group of cryptos out there, and we've seen that recently. Bitcoin's moved up to 117, and Solana's up there at 220. It's a bigger percentage move that you're getting from Solana than you're getting from Bitcoin, and that trend that took Bitcoin up to 117 grand versus the trend that took Solana up to where it is has been much stronger for Solana overall, and it's accrued more value, not in absolute terms because Bitcoin's made hundreds of thousands of dollars improvement on its price, but in terms of relatively. And so it's a stronger performing group even though they're smaller section. And part of the reason for that, of course, is the inclusion in the treasury thing and stuff like that. Solana's been a popular network. But if we look at the total 3 chart anyway, the rest of the chat that I wanted to have about this was to do with how this has come up towards what's nearly kind of a triple top or a cup with handle in this section, or maybe we're going to see an overall another phase of type of double top if we just zoom out and merge those tops together. If this moves above the highs here, total 3, overall, we get that breadth of movement towards the top side, then things will be very, 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 very positive, and that would be the tail that wags the dog. If we can see that happening in total 3 by seeing a movement, not necessarily from those top coins, because we do need to see the top coins perform well, the leader's got a lead, but if we see that movement coming more from the others section, the lower down chunk of coins, then what you'd have here is a very, very positive bullish signal, because it would show that there's this breadth in the market, breadth of strength across all the assets, and it would signal less of a rotation away from coins from within the overall crypto market, including Bitcoin and all the rest, just moving between coins and going from this to the stronger assets and stuff. It would be signal more new money coming in if we see a series of things happening all at once, but also the signal coming from that lower, longer tail section of the crypto market, which is higher risk, would be a very bullish signal of strength in the market, and for that to be the thing that carries total 3 above that double top section. As you can see, this is the 2-day others chart, and it's vastly different in terms of where the price is now compared to its former highs, which were at 450 billion, with prices currently trading at 312 billion, 220 billion, 230 billion down from where they used to be. Compare that to total 3, which is up here right near its highs, currently trading at 111 trillion, with the 1.11 trillion, with the high at 1.17 trillion. It's just in a stone's throw away from its all-time market cap high. So you can see the story there in terms of the tail that wags the dog being a very powerful one, and there's a trade set up there to be had within that. I thought that was worthwhile diving into that. We did make it towards our goal, which is excellent, and that means I can go back to talking about the title of today's show. Before we do though, before we depart, 117,000 on Bitcoin, very happy with that. Want to see that continue. I'm getting involved more in the markets if we can push past these previous resistance zones, and I'm liking the fact that there is not necessarily heading bearish divergence on the charts just there. It looks like we're just avoiding that, and that could be quite good if we just see small consolidation. But taking out that 50 simple, I'll sit on my hands for a while, really, because we've seen volatility between the 113 down to 108,000 bucks, and breaking down below 107 does lead for a move down to test that 200 simple at 95 and so on. But I am bullish overall, and I do actually think that there's a good chance that tail does wag that dog. We take a look at the others chart just before departing here. Overall, you see the overall upward channel that this is in. Nice finding of support at the 50 simple here on this 2-day time frame. Daily time frame shows another similar positive story in terms of moving averages, of course, as well. We have a golden cross over here, was retested just after it happened, and prices are still kicking around about that 50 simple moving average, so it's all pretty good. Cool. Oh, there's a cool other couple of things to take a look at here. That's a nice idea. I could take a look at that GDLC chart, sure. That's a nice one to take a look at. So just before we head off from here, so you got to get the point about that, about the others thing. If you don't, let me know in the comments of this video. I did try to be quite clear about the story there, but I appreciate it's a lot of kind of cascading information. This is a Grayscale CoinDesk Crypto 5 ETF. It's got a selection of those coins that I was just talking about in there. And as you can see, of course, it is one of the best performing assets amongst them all. And you can see that this particular tranche of coins is leading the way overall. Very, very strong, but when you get to moments like this and there's a bit of hesitation in a chart at all, amongst this small group, it can lead to people asking questions. They think, oh, will there be a little correction elsewhere? We have had a rise up, total 3's at the top. Maybe we get a pullback down here, and it starts with a test of the sort of the 200 simple period moving average on a broad time frame, see how that handles it. Daily is a good one to look at for that. So that's the story there. Thanks for sticking with me if you're a stock addict from the stock market. But if you're a crypto lover and trade these things, you'll have probably enjoyed that. And there was mention of the SPX. Here's another one that doesn't look too bad, just like that. little group. Doing pretty well. You know, that trade that we talked about last week, just to kind of check in with how it went. You know, if you did extend that over to the left, you can see that it was just taken on the suggested trade from last week with regards to this thing. So if you just go here, you can see that that's pretty tasty. That was just grabbed. And I don't know what I wrote 6545 in there. That was about risk management. Obviously, we got in there close enough to that though with this box, and yeah, that's brilliant, absolutely fantastic. Pushed up past its prior high. You know, obviously you're now in a position where you can transform that trade to be completely risk free, and you've got some profit from it. So that's not bad. You know, always a bit of value watching the show all around. Great. So we wanted to talk about PayPal a wee bit here in today's show. Thanks so much to everybody that took part in that goal. And what's the chat with PayPal? Well, one of the reasons why I like it an awful lot is because it has been doing what Apple has been doing. If you do cast your mind back to the competitors to Apple in around about sort of 2013, 2014, 2015, 2016, 2017, that run up there in time, you probably do remember a big rise again in the Android market, perhaps less so in America. Apple's always been dominant in America. But people from around the world will remember things like Apple getting pipped to being the #1 top selling phone, controversy around the iPhone X when it was coming out, the pricing model, all these things were coming into question, and that was a change in the Apple business model. It did go from strength to strength though, everything worked out well, but there was questions around the time about whether or not they'd got the same dominance as they had in the run between the iPhone 1 and 6. Or one in, yeah, well, that was about the time that it changed, that period. So there was some questions about moat. There's a lot of questions about moat for PayPal, worse ones, let's be honest here. There's definitely some big risks in their business in terms of will they be able to continue to grow because they're considered a growth company. And that's kind of where the risk comes from. You know, they are still making billions and billions of dollars. So much profit, it would make your eyes water. The question isn't about whether or not they're making a lot of money. The question is about the margins on the money that they're making, and as such, the market's been scratching its head over this one, and the price of PayPal sitting here around about $66.66 at the time of speaking puts it at earnings to price ratio of around about 14. Which is substantially lower than its peers in the industry.
It should be 21.
Yeah, you should be looking at something like 21 to 25. You've got other companies like out there that are getting 28 and higher. The days of 40x multiples may be gone for just now, but there's still like a return to a bullish overall market would see a rise into all boats. The question here is really kind of catch up with its competitors at all, and is there value to be had there on that front? And for PayPal, they're pricing that down slightly on that multiple because there's questions about the growth story as it was in a growth phase. And a growth company will do something like issue an awful lot of shares, right? Sell them to the market, get a few $1 billion for these shares that cost a couple of bucks each. The company then grows and grows and grows, and eventually their shares are worth multiples of that starting price. But they used that initial billions of dollars to get a big company out of it. And that's the sort of thing PayPal did. And then it's been buying its shares back later in its life. And this is something that Apple started doing around about 2013. And it did not immediately really help the price. So if I bring up the Apple chart here, ticker is AAPL, Apple Inc., traded on Nasdaq. Similarly, PayPal is traded on Nasdaq. Its ticker is PYPL if you want to follow along on your own charts. This is the 1 week chart. Apple doing very well at the minute, up there, a similar situation to the total 3 chart, right? Oh, could this be a total top, a double top? If it pushes higher, who knows how high it could go, because it could be extremely bullish in that blue sky territory. If there's a pullback, you know, anyway, we're not here to do TA on Apple. There's a low risk short opportunity there. You should watch Jamie's videos if you've got any sort of fears about the SPX and stuff, because he'll definitely enhance those for you, no problem. And his chat currently, he's saying there's a massive crash coming, and it would start with something like Apple dropping, but you can't be bearish on things right now.
Blow off top first, probably.
Blow off top first, probably, is what Jamie's saying there. And double tops and stuff like that, they're not really blow off tops. You've not got that enthusiastic. It's more of an exhaustion type thing. at that time. So let's take a look at 2013 though, when they started this process of buying their own shares back. This is the weekly chart, allows us to just kind of scroll back fairly easily, make a couple of quick comparisons across a couple of years. If I just zoom out a wee bit and say, so if in and around about this period of 2013 to 2014, the stock prices were trading at around, this is an adjusted chart by the way, so these numbers are reflected of what their current thing is, but anyway. Yeah, so say they're trading in about that $20 area. There was a nice move up and they did put in a new high. But then if we look back to really when this whole process started, there was a high of $25 on the stock price in 2012. Then they began buying their own shares back. They bought 40% of their shares over a period of a couple of years. They spent $50 billion, or like $45 billion to do it. We zoom forward a couple of years, get to 2014, right? It's same price there. The prices did move higher. They came back down. 2015, it's $22. Bounced again, came back down a bit lower. 2016, $22, $23. And it wasn't actually pushing really significantly up above the high it had in 2012 until about 2017, and the iPhone X came out and so on, that period of time. What does that mean? Well, it means that they were able to reduce their float by a huge amount at relatively low prices for themselves. I mean, like, look at how great that worked out for them. They made an awfully large ROI, if you like, on that investment. You could also say that they had to be very patient though, because despite the fact that they were doing this and reducing their float throughout, retiring the shares, what you're seeing is that the prices were not reflecting that, to the extent that the high that happened before the process began of buying their own shares back was then retested again several years into the process. Okay, so we then know, it's kind of a rest is history, sort of, because, the prices of Apple are currently trading at 255, 10x where they were then, and it's nice to be able to look back to something that was just within the last 10 years and say, look at that thing, everybody knew it was a great company. Yeah, there was threats from other people that made mobile phones or were distributing music services, or maybe people thought back then, yeah, the Beats headphones things, they're not so great actually, maybe it wasn't such a great purchase by Apple, and there's various issues along the way. At that time, Android were doing like full screen phones, and Apple were still using a button. And people were saying maybe it's gone from a case of Chinese rip-off cheap companies copying Apple's design lead to the situation flipping and Apple needing to copy some of these other companies because its product line was stagnating. That was the chat then. But if you'd bought the shares, you'd be up 10x. So if we take a look at PayPal, it has got competitors such as Apple Pay eating into its product margin, and it's got some things of its products like Venmo, which are not doing so well because monetizing them has not been particularly easy. So what happens is they get growth, and the growth is happening with lower profit margins on each stage of growth. So say they make X billion dollars 1 year and had a profit margin of say 10%. And then the next year they make X plus whatever billions of dollars, but the profit margin has dropped to 5%. Then the kind of the pessimist looks at this and says, oh, this growth story is slowing down and the margins are not there, and every penny they spend now gets a return of less. So back in 2017 for PayPal, when they spent $100, they would get a return on that of around about like a $30 profit growth as a result of spending that $100. But the growth metrics has slowed, so that for every $100 they spend now, they're getting closer to 21 and 22% growth. So you see that the story about that growth has dropped. So it's made the company, the people out there think, well, we're not going to give you as high an earnings multiple because we can't be sure that you'll be able to stabilize and stop the drop in your core product, which is the merchant payment processing part of the business. Merchant payment processing is a big deal, right? Because when you think about one of PayPal's competitors, Revolut, you might have heard of, you might not have, popular banking app for phones. You can see the entire business model that Revolut has. Apple could just spin up, or Apple could, yeah, sure, but PayPal very much could, perhaps even easier than Apple, spin it up overnight. So, why haven't they? And it's because actually the business focus for PayPal and the growth story that existed there has always been geared towards a two-sided solution, both B2B and B2C. They operate with businesses and regular consumers. Revolut is just really a consumer-facing app, and it takes a small cut of debit transactions that happen, and that is representing a profit margin to them of less than 1% often on their products, like 0.05%, stuff like that. Now, PayPal is focused far higher, looking at things like 1.7 to 3.5% profit on a lot of its business models on the B2B wing. It still makes money from the B2C. You don't need to know that amount of detail, perhaps. What you can know is that there's all these opportunities out there that they don't seem to be doing because of how the market views them and they view themselves as a business. Just in the same sort of way that Apple seemed to not be replacing the home button on their telephone for a long time, and people were kind of scratching their heads about it. So to me, it has a story that rhymes. As in the background, they're spending billions of dollars. Now, how much money are they buying? How much money are they spending on their own stock? Great question. They have currently got a kitty to spend $5 billion or so, right? They've got a kitty that's there. When I say currently, I mean up to the Q2 earnings when they announced a change, but up to then they had about $6 billion left. They'd spent $1.5 billion buying stock in Q2. So that's a lot of money. And you think, well, they must be running out of money fast. How much have they got left? It's about $6 billion. Well, that can carry them a few more quarters. And did they approve any more? Yeah, they did. Another $15 billion. So they're going to spend another $21 billion buying their own stock back. At current prices, around about $66, that represents, going with their plan to spend whatever amount per year, they're looking at buying about 8% of their stock back at this price. Prices are volatile, they don't stay at this price. PayPal stock just a month or so ago was at 75, a few months ago it was at 100. Right now it's at 66. You could look back a few months before and see it at 50, so there's a volatile stock there. But they're picking up above 5% of their own stock every year. They have done since, over the last few years. If you look at that over the last few years, the question then is also, okay, so how long have they been doing it for as well? And they've actually been doing this since about 2017, which might surprise some people. And it's like this has been happening in the background. There was a high in prices since, and if we look back, it is currently trading above, its prior highs before that in the past. But this low that came in at $50.79, this is at a different stage in the business. Over here in the past, it was priced higher. At that time, it was making less money per year, much less money. It had way more shares, so its earnings per share were even less. But its price to earnings ratio, therefore, was obviously much higher because people really appreciated that growth story. And that continued and spiraled upwards. Huge correction in the stock is shocked it all the way back down to those lows. Throughout that time, though, it's been buying and buying stock. So it's reduced its share base from around about 1.5 billion down to touching distance of $1 billion. When the earnings report comes out here in October 28th, there's a good chance that they announce that they've spent another however many dollars per share. I mean, they could even get to that 1 billion round number, or even below. Like, the chances of them doing it this year seem fairly likely to me. It depends. They don't really announce their schedule for buying. That wouldn't be sensible and stuff like that. So you don't actually know what exactly is going to happen. But, good chance that it happens. That how many shares is 1 billion shares? Is it too many? And this is kind of the question that they're kind of answering. At the start, there was definitely too many. At some point in the future, there'll be a really nice amount. Right now, buying the shares back, it represents a pretty good potential ROI, really does. So are they wise to be doing it, and what would some alternatives be? Well, they could pay their debt back, for instance. They've got about $10 billion in debt, but that $10 billion in debt matures between 2025 and 2050. So that's quite far away. So what sort of rate is it? Well, it's secured at, a lot of it was secured during the sort of zero interest period, so it's about 2.5%. huge cheap debt that they have right now compared to any other leveraged business. Really cheap. Could they pay it off? Well, they're spending, they just announced $15 billion buying their own stock back. They have the free cash flow. The next question then is, if it's a good idea to do this, I've heard of companies that do this that are not like Apple, that are like Bed Bath & Beyond. They were buying their own shares back hands over fist, and they were liquidated down to nothing. So how could you be talking about that story and for PayPal as being all good when I've seen a company that's gone bad? Well, the quick answer to that, aside from the fact that Bed Bath & Beyond was a legacy business model and had far worse threats from competitors than PayPal does, and it was, right, I mean, a lot of people had nostalgia for it, but that fact that it was nostalgic alone shows you just how much of a business of the past that they were. But they were using debt to buy their stock back, right? They're getting debt to buy it back. What's PayPal doing? It's using its free cash flow. So one of the best investments that it sees as experts in tech business, the best investment it can see right now is to just funnel tons of money into their own stock. And it's when you're looking at this vast amount of money that they're buying their own stock with, all coming from free cash flow, it begs the question, what are you talking about, growth company? This is a mature business which is able to perform an action where it buys its own shares back hand over fist for tons of money. That sounds like what they're going to be doing is adding earnings per share value to the company every single quarter without even having to actually change anything. And if everything remains the same levels, no growth in sign-ups, no growth in transaction value, no additional income from interest rates or anything, then what happens? Well, the company's earnings per share stacks up and up and up and up and up, which of course reduces that price to earnings ratio in terms of this. It's like what's going on there. Eventually, the reflection of how this company is performing will be re-rated in the market to better reflect the value that exists in the per share value. It's just a question of when. And the longer the prices of the stock are low, while it might be kind of frustrating for the person who wants to make money today rather than tomorrow, they just have to kind of remember the moments in the story for Apple when it went, as we see here, the price of PayPal was in 2018 was at around about $60-$70, and we see here in 2025 that the price is around $68. So they're that far into the process, and you're getting this opportunity to buy it now at these low prices instead of having to buy it 8 years ago or 7 years ago at the low prices then and be hoping to still get a higher return on your investment. This is a pretty decent opportunity. I kind of feel like there's some good things happening there. There's billions and billions of dollars just free cash flow flooding into the business. So what the effect has when it improves its earnings per share is that it affects this thing called CAGR, which, not to get too much into the nitty-gritty of things like that, it's just a rating about how much your kind of average growth is going to be of your investment. And what would be good for a company like PayPal if it was just a mature business, mid-performer in the S&P 500 or whatever, would be 3 to 5% would be good for them. Okay, if they were just a mid-performer. And then if they were to outperform, what would be decent? Well, 5, 6, 7, 8% puts them into that closer to the top bracket. If you want to perform like Visas and the really big blue chip, massive earning companies in the world that PayPal does aspire to be like, you're looking for a little bit more than that, maybe even as high as 15. But really, to be a really top performer, if you're to hit anything near 10, you're absolutely appearing on lists of where people are looking at lists of companies and saying, well, what type of thing am I going to get the best CAGR from? 10, wow, that starts to get mouthwatering. Show me the details. How does this work? Will there be any sort of accrual in the stock price value and stuff as a result of this growth and so on? So what effect, therefore, does buying this amount of shares at this price have? Well, if it's buying 8% of its own float back at this price, then that adds 8% CAGR to what they already have as a business. Now, there are other questions like, will the merchant side, as I mentioned, a strong part of their business, the growth there has been declining. In fact, there's been some volatility for them that they've had to deal with, and they've seen that drop. There's a story not too dissimilar to LivePerson in a sense that there's always a bit of churn, but they need it to stabilize, because you will get a new customer, or you will lose a customer here and there, but as long as things are stable, that's pretty good, and then to begin to grow a bit more. So have they stabilized it? Well, they have. They say they have. In their Q2 earnings, they said they stabilized it. That's the big question for the market, how they stabilize. If things stabilize, then you have to start pricing that in. It's not priced in currently at these prices. So if that was to be announced this month, that'd be quite good for a start, just to get ROI on the stock for an investor on that basis alone before they bought their shares back and everything else. Then, and do they have positive growth? Well, the EPS activities that they're doing are actually seeing positive growth, 6 consecutive quarters of positive growth so far. That's a year and a half, it's doing pretty good. And we might actually see another one coming up in just this month, which could result in the stock price moving a handy dandy 10% in your favor. If you're looking for a low term, sort of shorter term investment, you could see it test either of these moving averages. Got the weekly time frame up here. What else do you notice about these? They're so close to each other. If PayPal spends any time at all above $78, what do you get? A golden cross on the weekly time frame, and that's significant as well. That's where the prices would be going to test. Go to the daily time frame, and you see that a movement up to that equally takes out both of them. We've had enough consolidation in this zone to give us a decent setup. So that all sounds pretty good. If you want to know more about how these things actually happen, I could go into the details. You'd be thinking, if they're spending that much, then maybe it's reflected in markets. You might want to see things like the volume on the chart here. And you can see there are spikes on this volume, and it could be in those days that they're buying some more stocks, but not really that big a deal. There's a kind of average amount traded here, about 10 million a day or so, and there's a limit on how many you can buy any day. You can't be more than 25% of the market, so that most, if they ever wanted to do their stock buybacks in a short period of time, they could achieve it in the space of maybe 2 or 3 days, 4 days for like that month's worth. If they want to do all of the quarter's worth at one stretch, it could take as much as sort of 14 days. Bearing in mind that there are 20 trading days in a month, it does mean that they'd be quite heavily involved in markets overall, but it's not enough to actually affect the price itself. It would have a slight dampening effect on volatility, but not seeing a massive amount on the stock over time. But what we do see then, if we think that they're doing that themselves consistently on open markets, which they could be, that would be the sort of limitations they'd be looking at there. It would take a couple of weeks to get each quarter's worth. Are we seeing that happening though? I don't really think we are. I think that there's quite a good chance that the way this is working is actually through buying it through what's known as ASRs is it? Which is to say that it's an advanced stock agreement that they reach with an investment bank, who will then go out and purchase the shares on their behalf, having borrowed them initially to supply PayPal with them. So PayPal says, we want to retire some shares. They go to an investment bank and give them, say, $1 billion. And the investment bank gives them those shares, and they retire them that day, same day, right? So immediately it starts affecting the EPS for each share, and that's great. They announce it at the end of the quarter with the earnings and all that, but from a legal perspective and an accounting one internally, starts affecting it from that same day. But how do they get that many shares in a day then, all at once, doing this block buying? Is it all through dark markets? Well, no. What's happening is instead is they buy it from those people who borrow it. They have an exposure, a synthetic short as a result, you could say, by having borrowed shares that they need to then source over time. So what they then do is they buy a derivative, an option to cover any long side exposure they might have. And anytime the price is below what they paid, obviously, naturally, they're buyers of the stock, so that they're making a margin on what they sold to PayPal. And the upside is covered by the option that they have, so they do hope that it goes up as a result of their buying over time. And while they're limited to the 25% rule as well, this does create a far more blended approach to how things would appear in markets. You wouldn't be like trying to chase down like the dates that PayPal are trying to buy their stock at and stuff like that. It's not going to, unfortunately, that's not going to be enough. Still going to have to rely on technical analysis, looking at things like momentum, key levels, and how the stock's performing. That will get you through, and it's the way to do it. if you're just kind of thinking about this from a narrative position and you want to know the story and you want a sort of summary, I can give you one just now because I sketched out a summary earlier. I knew this would be a fairly deep dive, right? I thought that we would get to our goal, so I wanted to give all that information out there to folks. This is sort of key takeaways, right? 3 to 5% annual float reduction, kind of looking at things, even if they go up towards $100, that's what you're getting currently, though it's like 6 to 8%, but whatever. Plus, you've got 6 to 7% core growth, right? So their products are actually growing at around about 6 to 7% every year, all the time. But that's not enough for markets. So there's the growth story, the previous part of the business, where it's a growth business. Markets want to see their growth be closer to 10% on their core product, and they're only achieving like 7%. So the market's like, oh, we're going to punish you. Not paying attention to the story that's happening behind the scenes. Then you have 8 to 10% per share CAGR, when you add those two numbers together, is baked into the stock price. That's pretty nifty, and it's a secret sort of hidden metric. The stock, therefore, could be considered to be mispriced, trading at a 4 to 5% grower. It's trading like a 4 to 5% grower. It's actually growing faster than that, and it's got a multiple of 14x versus a reality of closer to 8 to 10% growth. Rate cuts help more than they hurt, right? Which is funny because they do make profit from the balances that they hold, from the interest that they accrue on that. But actually, they'll get more from transaction fees and stuff if actually the rate cuts happen. So it's an interesting one, but in fact, it's so much so that when they report things like their figures and their statements, they give you adjusted ones to remove the interest from it, which is crazy, right? So there's a company that's making billions of dollars in cash. The market's pricing it based on its core business achievement, saying, let's discount temporary high interest. And then when it reports that it's made loads of money, they actually deliberately ignore a lot of the money that they've made. And then time goes by and nobody says, what did they do with the money they made? And in the background, they're buying tons of their own stock, pushing up their own earnings per share. So you see there's a cash vehicle. The real risk is relevance, though. That's what remains is the big thing. The PayPal button being on websites and stuff like that, that's the real risk for PayPal. We've seen it disappear a little bit from some sites. I was looking at AliExpress one day, the next day it wasn't there, thinking that's odd. And then you see it comes back sometimes on some sites, and you're like, oh, look, yeah, PayPal's a thing. Yeah, that's right. Is it going to remain relevant or not? I think it's still big enough that I think it is. But yeah, that is their key challenge, right? Will they ever get rid of the home button, or do people still going to buy iPhones when you get a better screen on an Android or whatever? Management is signaling ambition. PayPal has got this new product called PayPal World, trying to bring a lot of things together. It's pretty good. They're signaling ambition, but it's doing it. Alex Chris, the CEO, does it in a kind of subdued way. Interestingly, if you're looking at comparisons, right, you've got like Intuit, the company that he used to be CEO of. They've got around about 400 or 500 million shares. PayPal's got about 1 billion shares, and over the next while, it's going to reduce its share count down by, potentially, of this plan at this price, but things are subject to change and prices are probably going to go up. They'll reduce it in the next period, the next 3-4 years, down another 20-30%, something like that could happen if prices were to be low. Prices are high, might go down 20%, but you can see that there's that the idea that they've got too many shares is kind of a funny way to put a spin on something that they're building momentum towards and getting a lot of free cash flow and sticking it into. So it's a nice distraction to talk about it that way. Next earnings is October the 28th, and that's going to be key for us in terms of like our next major milestones. What are we going to hear from them? Product initiatives. What are the macro tailwinds? Because actually we've had macro headwinds for quite a while on that particular name. And that's it, that's it. So how do I feel about it? Pretty positive. I've laid out a story for PayPal where it's got a hidden metric, a sleeping giant, and it's a company that's making so much money that it's able to pump billions into its own stock and people not even notice. It's not like they're running out of cash, is it? They've got billions of dollars in debt, which is at a really cheap rate that they can see as a better ROI on their own stock to buy it. And that's exactly how they're delivering value to shareholders with what is a really actually pretty strong business that does face some margin, moat issues, but it's growing well, and they've got IPOs coming up for some of their products, stuff like that. Pretty good.
$78.
No? What do you mean? It's $66. 66 is the current price, isn't it? Or what, 66
It's going
cents?
to $78, isn't it?
$78, yeah, easy. Like
It's in the
94
4
bucks
hour.
up there is quite high, you know, in the
Yeah,
4
but-
hour. Oh, just make this automatic.
Isn't that the 4 hour it's got the RL flash?
My hour flash may not be activated on my laptop. It always deactivates the stuff when it loads up my old browser screen on this particular cookies I've got. I don't know. Anyway, not seeing the 4 hour flash as it happens.
Oh, there's a big gap.
There, oh, look, this is the one that goes down to 37. That would be such a great buy price. It'd be so great. So if there is some problems, I mean, let's hope that we get in there. PayPal would be buying up billions of dollars at that price too. It would get literally double. It would reduce its stock, its balance, reduce its free float by around about 100 million shares plus. Take it down by 10% if the prices drop down there. Mental. So. Yeah, and the weekly time frame, yeah, exactly. It's going up. That's what I was saying. Did you not hear my analysis? Jimmy's saying it's going to the weekly 200 period simple moving. That's my analysis. That's my analysis. He's sitting there and he's like, I've had this great idea. I don't even know where it came from.
I'm a genius.
I'm a genius.
Everybody, I've had an
It's like,
idea.
I just said that. Yeah, so that's what I'm looking at. That's how if we move up towards that price is. It's handy as well because, as I was saying, Jimmy, at the time there, if you look at the daily time frame, you can see the sideways, slightly slanting down. Moving averages there, going up and testing that area puts prices above that, and it starts to get a change in the perspective. Looking to see if we can get a golden cross again at some point. That previous one failed, but I think you get a second one, then it doesn't fail so much, you know. It doesn't fail so much. You see that all the time with golden crosses. You see it all the time. So, yeah, that's the Bitcoin chart. We talked about Bitcoin crypto today. Let's see, 17.5. It's doing all right. We're 52 minutes into the stream. That means I've got a good chance here to check and see if I've not missed anything. By the way, folks, it seems my notifications aren't coming up for any donations and stuff that happen. If somebody has done that, type that in the chat box if you've done it. Just tell me what it was and we can discuss that. Now, as I said, that stock going down in price, offering great value and so on, is a big deal. I think this is another one that's a big deal, right? And talking about how I talked about PayPal, and it says, you know, if you're buying it back in 2018, looking for it to move up to take a place in the Magnificent Seven, for example, then you just kind of missed that, and it's been years, and then it came back down to the same price, and great. And then to all the people who are thinking about buying some PayPal today, then you know. I'm not a financial advisor, I'm not telling you to do that, by the way. Just saying to all of them that do it today, you know, you're great compared to years ago, because you're getting cheaper prices, so it's great to be arriving today. And I would say the same thing about this stock. It's great to be arriving today. If you are just new to the channel and whatever else, then hey, here's a decent value opportunity in the markets right now. We've been talking about where you're going to get a double bottom. Where's the double bottom coming in at this one? And did this push down to 50-ish cents represent a double bottom challenge of this previous low? But also aware of the risk, long tail, long shadow candles often get retested, and in this period, excuse me till the drawings there is of course tests happening in this zone. Are you going to buy it again, etc.? This is all happening in the run up to increased supply of shares, which is kind of feeding into the markets. And another question from that PayPal section would be, when they retire the shares, do they disappear from the markets immediately? Because I know we've got a lot of GameStop fans, investors and so on as part of the audience. They'd be like, well, what happens to the shares? If they retire the shares immediately, do they immediately disappear? No, they don't. Legally, they do. Reality-wise, they don't, and GameStop investors will know all about that. It takes a long time for these things to actually feed back through the markets, and the chances of things being a bit messy are always there. But there's a lot of shares out there for PayPal, and a lot of it's institutionally owned, and a lot of the buybacks happen with people who actually have some on their own books as well. So I think they probably do get real shares eventually, but do they, on that day, leave the market? No, they don't. These ones here coming in the market, big deal, yeah. So there's a supply issue right now. We've got this kind of share thing wrapping up tomorrow, so this has been a bit of negativity coming into that. But then, you know, that's the end of that story for now, and we can at least celebrate some closure on that front. So I think that's a good story, you know, getting to the end of the
Well, I
thing.
like a good story.
And that's where we are with the show. So
Good show. I
You
think
heading off?
LivePerson. No, I was gonna. Well, it depends what the scheduling is.
all right.
I'm doing dad and whatnot.
Oh, right. Well, folks, I will wrap up my show just now. Let me just
Right.
check I've not missed any crucial
Well, people
messages from
wondering about
folks.
The LivePerson thing. I interrupted it. Of course, that's the most important part for some people.
Well, this is LivePersons just saying to folks, you know, the if we're coming towards the end of this immediate bit of, hey, is there more supply coming out in the markets, questioning, then great. It's great to be towards the end of the story. That's why it's good to be watching this today and saying, well, hey, I mean, this is a fairly cheap stock, yeah. Is it relative? Is it fair to say cheap when it's been trending down? Okay, I get the point. But there's been a business transformation happening on this one for quite a while. And the result of it that brought the prices down to these lows in the past was to do with threat and danger. And what's happening here is to do with, you know, accepting the realities of what that really was at the end of that period of threat and danger, what really was there. And it turns out that overall LivePerson had managed to get a far better end result than what it looked like it would have been during the cascade of prices down towards these lows from way up. So they actually managed to restructure their debt and everything else very, very well. And there is positive grassroots signs coming at the company. And I think I'm quite looking forward to the earnings call for these guys too. In fact, when is that again? Let's just double check here. Is 5th of November. Remember the 5th of November. Because one of the parts about this I've noticed is they seem to have a negative, positive attitude on their calls. And I think just even any sort of sense of like the amazing work that's taken to get the company to where it is now being presented to shareholders in a way that frames themselves as with the forward-looking, you know, positive aspect that they actually do have, would really change a lot of the kind of the feeling in the markets about this company, because there's a lack of optimism that exists around this currently, and I think that that's quite easily addressed by some actual kind of refreshing look at the hard realities, which are certainly a heck of a lot better than they were the last time the prices were down at this price. And the movement towards fixing those problems has been achieved an awful lot, and the runway's extended. So what was once an existential problem is now just an administrative one, and that is very, very different, very, very positive. So I think that will get reflected into the prices and re-rated, but with an increase in supply and so on, then what you're going to do, like a lot of supply equals, you know, in the same way that hedge investment bank that sells shares to PayPal is in a synthetic short position, they're in a synthetic long position that they didn't necessarily want to have to be in, which means they then have to take derivative trades to hedge their position due to fiscal responsibility needs, which means that they're buying downside risk from a market maker, who then in turn needs to actually look at the delta that they're exposed to and hedge that themselves by selling a proportion of shares. So this sort of activity that happens in a big chunk at times like this has a negative downward price pressure on the stock. But to say that that's coming to an end soon and it could have alleviations on price, I think is a fairly natural way to look at things like that. And yeah, we're going to have confusing signals coming from places.
Some people like focus on things like insider buying. You know, it's like a big topic of conversation, insider buying, and it seems to take on greater urgency, that sort of conversation, when the stock price is low. But it's not really tied to any particular business outcome, you know. And if it was that easy to push a stock up, everyone would be doing it, right?
Yeah,
I
but
mean,
also as well, the insider buying stuff, it's like the stocks are cheap when, the truth is stocks are cheap when they're moving up the way, because tomorrow they'll be more expensive. And to see insider buying happening at a time when the stock prices are low, yeah, we want to see it because we think capture that great value. But they're also going through things like having to like sell off because of tax obligations, some shares. They know they've got millions of shares waiting.
I don't care about selling like it's a significant proportion, but a lot of people want to see buying. You know, they care about it, but I think that it's not actually tied to a business outcome, and so it's a little bit irrelevant. And if people were able to push up the stock and change the sentiment just by buying their own company, insider buying, as opposed to a share buyback, then that would be a very cynical way
Yeah.
of trying to boost your company. It's not going to last, you know. Also, it's going to be the sort of thing people would see through. So, I don't really think that it's necessarily an important point of concern. And then people who would say that there's a negativity around the fact that they're not doing it, I don't think that's a fair assessment, because the nature of a company at this stage and them committing their career to working for it is a huge risk in the first instance. To ask them to then start spending the salary that are being paid on the company itself, you know, that's maybe a distraction from working on achieving the real key performance indicators. So I don't put a lot of worry on it, but I see a lot of people do. And then the RSU, that reward for working at the company by getting stock, I mean, that aligns the people at the company with the investor base, so that's a positive move.
Well, they're already working for that. You know, they're working for the stock price to go up so that the company has enough money to afford to keep giving them more stock bonuses in the future anyway. Like, they've got a different route to getting stock than we do. We're on the outside, they're on the inside, so they can get given the stock by the company. It's a totally different kettle of fish.
But people do ask that, you know.
People ask that. Okay, people are asking what specifically? Why there's not more insider buying, or why? What? Because the recent headlines on it have just been about them selling some shares for tax obligations.
That's not what people are
that's
concerned
nothing,
about.
That's nothing to do with it.
See insider buying.
Yeah, well, that can happen. Like you say, it's but when they want to look at business stuff, right? So the business on the inside, they're doing really well and they're achieving great goals. Then you think, oh, because they know the business and they've got insider information, they should act on it and take their salary and spend it on this stuff, even though that they know that they've got shares that are already super long on the company, and that they want to work really hard to get those shares to be worth more. And in the meantime, they want to keep their school kids going to like private schools and spending and having their nice life. I mean, I don't judge them. They're massively long on the company. If they feel like they need to become just to get some more money in their lives, though, they're also, you know, not fully appreciating the character. The success is different things to different people. And I think John Sabino would be looking for a lot of business success.
I mean, it's not really like, I mean, we can say as investors we'd like to see insider buying, but I mean, the staff at LivePerson might say to themselves, well, I'd like to see all those people that watch those guys on YouTube come in and do my job for me for 365 days a year, you know. And like, what's the big difference in that equation? Not much, right? Solve it with symbols, and you know, everybody should just focus on what they can do, which is manage their risk.
We shouldn't judge them through our anthropological lens. Like,
exactly.
we're traders and investors, so we think, oh, if I was in this position, I would do this. Whereas quite often, if you like just think about your own life, you maybe had some great success at work that day, and you go home and you have sex with your wife, and that's success. And they don't wake up the next day and think, I better open up my trading app and buy some more of the company I just had success for. They're living the life. You know, just think about it from reality's point of view. There will be times in the future when some people will want to invest in the company, and they probably will. And when those things happen, we'll pay attention to it, right? But being focused on
and paying attention to it, and perhaps what a lot of people don't realize is, like, you've only got so many of these bullets, right? Now, if you want to deploy the insider buying bullet, it's like bullish news. You release it into a bullish trend, because then it has the biggest impact. But you can stand there with your 6 bullets shooting 5,000 zombies coming in the window, and no one's going to bet on you. But if you're on top of the building, you've killed everybody else, and there's just a few celebratory shots left, right? Fire them out, and the press will be like, yes, we won the war. That's a great time to do it.
I think as well, like this simple idea that there's scrutiny over it. People are asking, why aren't they buying? Like, the more that you do that, the less inclined anybody would be to buy. If they were able to buy in private and not have all of their life scrutinized, then they probably would. But, you know, what happens if as is so often the case, like, look at PayPal, right? They're turning over billions and billions of dollars, and they know what they're doing on the inside is fantastic. But the market keeps disrespecting that, and the price of the stock is really, really low. You know, so the markets don't necessarily reflect the business success at the time. So even if the business was doing amazing today, and somebody came in and said, buy the stock today, they'd be like, look, they're all looking at what we're doing, and the market's got its own story at the minute. This isn't the time to buy our own stock, and I think that's a totally fair perspective as well.
Yeah, but also there's the RSUs, you know, and like there's the reduced price for employees to buy this stock. stock. So they're still doing it as part of their salary, and it's just it doesn't fit in with the flashing up on Bloomberg or whatever it is that people are looking to see. Now, I don't mean to patronize anyone, but if that is the way that you see your company growing, then you're a very cynical trader. And it'll be easier for you if you had a more pragmatic outlook and a strategy that was based on real key performance indicators for the business itself. And as an investor, that's what you analyze. Nobody serious as an investor is making a trade based on an insider buy. Like, no one.
You're not on camera, but if you think you were saying there. Yeah, so there's that. There's also as well, if you're going to be like that, you're going to be like super into it, like, oh, they're not buying, then I suppose then you're going to be super hyped when they do. But I kind of don't use that as a metric or signal for me to actually buy or sell stocks, really. So I'll be buying it on my own schedule, and I'll not be buying it on the schedule that they might have. So, I mean, if that doesn't align properly, say they only start buying the stock when it's above $5, I don't mind. This is an investment decision.
Yeah, so. And also it's like part of the reason that this trading group, rabbit ears, is so effective is because of our positive attitude, and one of the elements of that is there's a bright, wide open, long future ahead of us, during which we expect many of the officers to be buying shares. Do we care if they do it right now? It would seem cynical to the market, and I can tell you that from experience. Whereas if they do it later, when the trend starts moving to the top side, that'll be taken with more substance, and people will put more weight behind that. Yeah. So that's when we want to see it, not now.
Yeah, exactly. Just a bit more detail and colour on that seem cynical thing. What would happen is you would then be listening to the earnings call and thinking, oh, he didn't sound that positive. Like, why did he do that? And then you'd find out later on, oh, he was buying shares there, or the stock price went up, or was he like being negative there in order to, was he trying to, and all those questions that come up versus when the price of the stock is going up anyway and you buy it anyway, then nobody asks them. So you just for the sake of your own health and that you would do it at the right time. Otherwise, it would be a little bit naive, which does signal that the question has a degree of that included in it. But it's not to be condescending to people asking it, because it's a natural question to ask. If somebody knows that something's great because they're looking at the mechanics on the inside and they want to buy the thing, then I say all power to them, and it's fantastic that companies can do that, and I welcome them. I welcome them on whenever they want to.
That's really good. It's brilliant, in fact. Also, it's not like we can expect them to be doing that, because this is an extremely risky job that attracts a particular type of person, and the actions and methods involved are not simple or easy to learn. So to
explain
ask
it
somebody,
to your wife,
explain it to your wife. You're
like,
look,
I came home from work today, honey. I bought loads of shares. I'm a company, honey.
Car. I bought all. What price did you buy,
John,
darling?
we've been living here for a year.
Timmy's bike's just been nicked.
And you're telling me that you've not made a single penny from
your
job?
You haven't even taken out the bins.
Explain it to your wife.
You're going to have to tell your wife that you properly manage restaurant. They've got actual job. They've got their other job to learn. It's like we So
yes, John, Mr. Sabino, was it your job to be spending our money on this thing? What happens if? And it's like, explain it to your wife. You can't. Whereas he's a guy making a lot of money.
But there were zombies coming in the window, and I had to shoot them. Yeah. It's like, where's our bullets now, John? Yeah. Where are they?
So I'm not that bothered, Sabino's got over 1 million shares there locked up, and John Collins got over 1 million shares all locked up. I mean, they're locked in hard, long on the position, and they won't even turn around tomorrow and just dump them all. So because they're locked in.
Touch Harry Wood.
Touch Harry Wood, yeah. So they're locked. So that's the current situation. If they weren't long on it already and they were the director of the company, you'd be like, oh, what's going on there? The company couldn't afford to even pay him the bonuses that he deserves and whatever else. Nah.
Z471 makes a good point. He says, I'm not advocating for them to put their life savings in. So that's, no one is desperately extreme in their opinion here.
But the fact of the matter is that John Sabino was the CEO that resided over improved and extended terms for the company's employees to buy those shares back.
And we were the shareholders who voted on it.
We were the shareholders that voted on it. So let's not completely divorce ourselves from what's been happening. And the system is that they didn't have enough shares to sell to their own employees, so they had to issue more shares, and we approved it so that they could sell them to their own employees. So given that is the situation the company's in, And the question could be then boiled down to, instead of pointing at one person like John Sabino, boiled down to, were there enough shares for the company to sell them to the people who work for the company who want to buy them at higher prices previously? And the answer was no. And since then, they've done a lot of work, they've bought a lot of shares, and they're looking for that to turn good. And that's the fact, right? So I don't care how much shares John Sabino has necessarily.
Yes, well, I think he's doing a great job as it is. You know, there's a lot of different things that he has to manage at the minute. In this period of a business, like he's doing a very good job of managing the communication from the business, and there's an awful lot entailed within that. I don't think that he needs to add this to his plate.
Yeah, he's doing more than one job currently. Right. So anyway, look, this is the chat, guys. We've done a great show. We've explained so far in today's show lots of stuff about Bitcoin and crypto markets, how I can see the tail wagging dog story playing out using hard data to show you what that would look like. We've explained a great detail about PayPal and why it's like a decent opportunity where you might get 100% over the period of the next couple of years, few years. You know, I'm not saying that that's definitely going to happen, but you know, are there metrics out there that suggest when we look at pharma companies and how this kind of activity can impact a company's value over time, we do see an awful lot of positive stories, and they're doing that. So I would like to see them get the same positive story as well. I think it's possible. And then we moved on round to take a look at LivePerson. It's at lows right now. And the thing that I would just say about it is, if you're joining us for the first time, welcome.
Welcome.
Cheap
And
compared to others.
if John Sabino, good old Johnny, I mean, it's we call him John, but there's about 85 Johns at LivePerson. If John is going to buy some LivePerson, he probably wants to know the price to buy it at 51 cents. That's not bad. 45 cents if it gets there, even better. These would be encouraging places to buy. Or would you rather see him buying it at $5, $6, $7, $8, $9 when he's getting given?
Yeah, another thing to point out on that is that maybe as well for a lot of other people, the price to buy it at would be as simple as saying, where's my mouse gone? Here. Simple as saying when it goes above this high. So a lot of people out there are like John Sabino, right? You might be waiting till this is the daily time frame, and you might be thinking to yourself like, oh, you need it to go above something like 150.
Which point
right?
is going straight to 270, but no one wants to hear that right now because they all want to cry.
But I'm saying to John Sabino, who's looking for a range of options, like, yeah, you've got this one right now, which we're well up for because we see the good value in the company. If you need to explain it to your wife, there's that other one up there. There's a whole dollar between here and there. But I think that after, anyway, it does still get a chance to run even more dollars. So there's still going to be a lot of meat left on the bone.
Yeah, I'd rather see him put, like, you know, like, it's not about choking the engine or whatever. It's about giving it extra oomph when it goes back above 150.
Yeah.
And that, even that, it's a bit cynical. You know, really.
Just saying. If he wants to be the one that pushes it past a former high, then with a few million bucks there, then cool, go for it, John. That'd be cool. All right.
As it happens, you know, if you had just, say, 12 to 15 million dollars.
You're not on camera still.
Well, I should be. If you had like 12 to 15 million dollars, right, considering the market cap of the company, right, so you only need 12, 15 million, and you deploy that sensibly on the right contract and with the right shares at the right prices, you know, within the liquidity that we see on the daily trading volume, you could easily cause a little bit of a squeeze with the market dynamics there. And that's not just, that's a theoretical idea about one person. So the question is, you know, when you can see what's on the chain and the liquidity and the daily trading volume and everything that's on the books, and you could work out exactly how much it would cost to push the price up to specific levels to then determine like how much you'd have in terms of paper profits. These are like really simple maths, and the profit signaling mechanism to big firms is quite clear over these volatility periods and these sort of events around capital restructuring. So I think that you make your own outcomes in LivePerson, especially when we've acquired so much of the available shares. So keep the faith.
Big time. It would only take like 12 million to buy a serious chunk of the company. It's insane, right? It's insane. I mean, cheap's a relative concept, but it feels cheap to me. With love is how we end this show here, everybody. Big shout out to the likes of Lisa, Minner, I'm Not Cat, Merrick, and many, many others who've joined us in today's show. And a big shout out to everybody who did the fan support part and contributed towards today's
good effort, everybody.
Thanks very much, everybody.
Good effort, everybody.
yeah, so that was big shout out to Lisa, Bernard, Natural Friend, Chimpy Yang. Good evening to you, Minner, Nick G, Disco Biscuits, and everybody else who's taken part in today's show. Thanks very much. Catch you later.